Hello, everyone, and welcome to the ILI webinar on enhancing procurement integrity with automation and data analytics. Today's speaker is Tom Caulfield. He is an ILI faculty. Tom is also the Chief Operating Officer for Procurement Integrity Consulting Services, and he was also the Executive Director of Training for the Council of Inspector General on Integrity and Efficiency. And Ken Nats is the Director of Solutions Development for Zenkos. And Ken has had more than 20 years of experience working in the software industry. So thank you both for being here, and I look forward to a wonderful presentation on enhancing procurement integrity with automation and data analytics.
Well, thank you, Kim, for that beautiful introduction. On behalf of Ken and I'd like to thank you for listening to our webinar. We think and hope we have some good information to pass on to you. And of course, we'd like to thank ILI for allowing myself and Ken to actually talk about this subject, okay? This is important to us simply because, for example, myself, I have nearly 4 decades of experience in fighting fraud and corruption in public procurement. And so it's very important that we share and give you some examples of some things that we've learned throughout the course of that. And at this time, I'd ask Ken to give a little introduction of your background, please.
Thanks, Tom. This is Ken Nats. I'm the Director of Solutions Development at Zenkos Consulting, LLC. We're a company who partners heavily in the technology space, focusing on things data and analytics. I spend most of my time focusing on financial crimes and financial crime solutions, as well as procurement, fraud, integrity areas as well. And like Tom said, we're really passionate about this, and we've come together to partner with our expertise in data and analytics and Tom's expertise in procurement. We think we have something valuable to share with everybody today.
Thanks, Ken. And what we're hoping to do today with this presentation is we're going to highlight various domestic and international strategies and approaches to not just detecting, but also preventing and identifying corruption and fraud in public procurement with automation and data analytics. Now, some of the examples that I will be giving is experiences I've learned over the last several years working for the United Nations Office of Drugs and Crimes. And what I've been hoping to do is to not just tell you how we use the strategies and what they're doing, but where there's been some successes and where there's been some challenges. So that hopefully will be something that will allow you to give yourself some thoughts as to how your organization or your government's taking your approach. Again, when you talk about strategies, when it comes to prevention and detection with automation and e-procurement, basically, so many countries approach it from a prevention perspective. And as much as I do agree with this concept, it's not the only way to think about how you can use data analytics. And when Ken gets his chance to talk, and he'll be much more informative, he'll start giving you some actual technical strategies on how you can detect potential corruption and fraud. Now, from a prevention perspective, basically there's 3 things that people will justify going to an e-procurement system and automation. And it's a true statement in every way. E-procurement, simply instituting an e-procurement system, will basically enhance transparency in what your organization is doing. And transparency is critical for the prevention of corruption and fraud. It actually provides greater opportunities for people to get involved with your procurements. It enhances your competition because more people know about it, there's more transparency, and bottom line is through automation, they can actually get the RFPs, they can actually get more of the documentation. So it actually enhances your opportunities for more competition. And last, it actually reduces the amount of face-to-face time between the buyer and the seller. And let's be realistic, corruption starts in so many cases with some type of collusion between a government person, i.e. or a buyer, and a seller. So by bringing in automation, you reduce those opportunities for that behind the scenes, secretive interaction. So just those 3 things right there, many times, many countries will use as their justification for enhancing their automation through e-procurement for the purpose of anti-corruption. With regards to detecting schemes, Data analytics allows some rudimentary and even more sophisticated pattern searches of detection for potential corruption, fraud, and improper payments. And I won't pretend that I'm familiar with those to the level that Ken is, but that's probably some of the challenges I see, especially globally. We're not really capitalizing on all this data that exists, and which was one of the reasons why Ken and I wanted to do this webinar, just to remind people that with all that data available, you need to enhance your aperture and think more about how you can actually use that data to not just prevent, but also detect potential anomalies. And let me start out with a little war story. Let me give you an example how it was actually used one time. Some people I know, or actually some people working for me, were conducting an investigation. And this investigation started out against a gentleman, let's just call him Mark Swindle. He was an employee for a U.S. government federal contractor. What his job was a building manager of a large warehouses. What had happened was the U.S. government had actually contracted a huge corporation to supply some very historical, sensitive type of equipment. This equipment was so valuable and some historical value that the buildings that it was in, everything had to be monitored. If the atmosphere changed, if the water density changed, if there was too much moisture in the air, all these things were sensors monitored. And these building managers that worked for this contractor, their job was if any of the sensors went off, they immediately had to go out and find a contractor, a subcontractor to come in and fix whatever it was. If it was a leak in the roof, if one of the vents had broken, basically that was what they were hired to do. Well, we received information that allegedly Mr. Swindle was taking bribes from a subcontractor to award work orders under $50,000 when work wasn't necessary. So he was allegedly being paid bribes to give fake work orders to this particular company so that they could submit invoicing to the U.S. government, and that government, then the U.S. government would pay the major prime, and the prime would pay this sub, and then the sub would give a kickback to Mark Swindle. In the U.S. government, under the laws, there would basically be a potential violation of false claims and anti-kickback statute. So we had this allegation, but what we didn't know was how we could prove it. What we had done was realize that Mr. Swindle was one of 24 building managers with the same authority to award work orders. So what we thought to ourselves was, if there's 22 people that can do this, and they are supposed to make individual selections of the lowest bidder, let's go ahead and see what type of bidding rotations or what type of awarding he was doing compared to the others. So with the cooperation of the federal contractor, we used some basic rule-based analytical searches, and we conducted 3 years of all building managers. Again, our goal was to see what was he doing. Was he making random selections, or was he given preferential treatment? And what we found out was that Mr. Swindle awarded 116 out of 124 work orders to the bribe-paying company. And we knew at that particular time the mathematical probabilities of that being the lowest bidder every time wasn't probable. We could not have done this without rule-based analytics. To put manual searches on that much data would have taken us way too long. But what we also found out was 6 more building managers that we weren't got information on. We also identified that they were also selecting the same bribe-paying company. So when we started our search for Mr. Swindle, by doing our search of all 22, we found out there were 6 more that had the similar patterns. Once again, if we were doing this manually, we never would have thought to be looking for those others. But through automation and rule-based analytics, we were able to identify that. So what happened? Well, the subcontractors, the actual owner of the company, because we found out he was actually the mastermind, and 7 employees of the federal contractors were convicted of various federal crimes, including anti-corruption statute. The owner of that subcontractor received 13 months confinement in federal prison and paid $1.3 million in fine. The employees of the federal contractor were also fined a total of $800,000. And one of their employees was sentenced to 6 months confinement, and others received supervisory probation. Now, you would think that it would end there, but the fact of the matter is, we also came to appreciate that in the United States, there's called the Civil False Claims Act. And at that particular time, we come to appreciate that under the Civil False Claims Act, because the prime contractor did not have sufficient oversight of their own employees, and that lack of oversight allowed the U.S. government to be cheated millions of dollars, that company pled guilty to $2.2 million in fines. This all is just a demonstration of how easily it is when it comes to using data analytics and some of the more advanced capabilities of your data. Ken, if you would, talk about what your thoughts about as relates to the tip of the iceberg on this one.
Yeah, thanks, Tom. That's a really great war story spoken from the trenches. What I'd like to add in there, and where we'll start a conversation about data, is with the enormous amount of digital data being collected and stored by e-procurement systems, data analytics allows us to go well beyond being reactive and simply supporting an investigation, and now and into the future will allow us to be more proactive. What this allows us to do is open the door to identifying new and different forms of potential misconduct, reducing the opportunity for potential reputational damages, identifying financial losses sooner in the investigative process, performing more effective contract oversight, improving your internal processes, and then ultimately achieving the goal that we all have, which is enhancing procurement integrity. As you all know, the term procurement integrity refers to honest, fair, impartial, and legal contracting free from corruption, fraud, and/or improper payments. So now looking at the 2019 ACFE Anti-Fraud Technology Benchmarking Report, in that report, the authors were asked, in what risk areas do your organizations use data analytics to monitor fraud? And as you can see, the number one was purchasing at 41%, followed closely by disbursements at 38%. As we transition into the next slide, we're going to talk a little bit about improper payments. Data analytics can also be used to identify improper payments. As everyone's probably aware, improper payments are not always the result of misconduct. Improper payments are ones that should not have been made or that were made in an incorrect amount, including overpayments and underpayments. So statistically speaking, in 2019, the GAO reported that federal entities estimated they improperly paid about $175 billion. Of that $175 billion, 69% or $121 billion were concentrated in three program areas: Medicaid, Medicare, and earned income tax credit. Now that $175 billion from 2019 was up from $151 billion in improper payments from 2018. And for the fans of statistics, let's add a couple more in there. Improper payments have been estimated to total almost 1.7 trillion government-wide, as measured from fiscal years 2003 through 2019. And globally, it's estimated that $10 trillion on average each year is spent on improper payments just on government contracts. So the risk of improper payments remains a significant concern. These reported lost billions of improper payments in the federal government do not represent those only in procurement, but also include multiple social programs. All estimates included here were found on GAO's website, so you could go track those yourself. And the global estimate was reported by a lead procurement specialist for public integrity and openness of the World Bank Group. at the 2019 United Nations Conference of State Parties. So what do we mean by data analytics? Tom introduced me as somebody that could augment his fantastic experience in procurement. But what do we mean by data analytics? Let's level set. Data analytics typically refers to the use of statistical and mathematic techniques to identify trends, patterns, anomalies, outliers, and exceptions within data. For many years, organizations have used various data analytical techniques and approaches in a wide range of business areas, including marketing, customer surveys, financial areas, and influencing financial investment. Data analytics eventually became a technique to help ensure payment integrity, like that used by credit card and healthcare providers. It's also being used as a tool in identifying potential misconduct or non-compliance with internal policies. As we transition to the next slide, let's talk. There are many, many techniques in data analytics. Today, we're going to focus on 4 main techniques. Depending on the data and the resources available, it can involve a single technique or multiple techniques. More sophisticated techniques are also being designed where the data analytics results are used to improve ongoing capabilities. You sometimes hear them referred to as machine learning or artificial intelligence, where the results from some of the analytics learn and feed into the next step in the analytic process. So we're going to focus on 4 areas, like I mentioned. When it comes to data analytics, some techniques help to identify indicators of a single misconduct scheme, and some techniques help to identify potential indicators of multiple misconduct schemes. And others will identify indicators of both a misconduct scheme and a potential improper payment scheme. So Tom, I'm going to turn it back to you for a little bit.
Thanks, Ken. And, when I spend time with Ken, I always have to remind myself, that he starts talking about all these different techniques and all that stuff. And I think to myself, I'm a simple guy. How do we do this? What's the basics? What do we start with? And I always come back to remembering, you got to know the data. I mean, and it's not just understanding what data your e-procurement system is collecting, but also its availability, the reliability of the data, its format, is it structured, or is it predetermined data sets and free-flowing text, and how the data can be analyzed to identify indicators of specific schemes or misconducts or improper payments. And you can think, well, data scientists like Ken have to know this stuff, but the reality is this is a collective effort. When you try to do data analytics, you have to have a partnership. You have to partnership with people who are procurement people like myself who do anti-corruption. You have to have people who are like Ken who are data scientists, but you still have to understand the data. You have to understand its availability. Is it data that was credible and we can use it? Then after you've done that, okay, then after you appreciate knowing the data, then you have to understand, okay, if you have both pre-award, post-award data, your analytics can be much more complete and thorough. And what I mean by that is if you collect the dates of a contract award and the first contract payment, and each payment amount can help to identify any vendors that receive payments prior to the contract award, as well as any vendor receiving payments inconsistent with similar contracts. So knowing the data and knowing how much data you have, if you only have pre-award data and you don't have post-award data, that gives you limitations on what you can do. But first of all, you must know what data you have, and you have to understand, is it data we can use? How much we're collecting it? Is it reliable? Is it credible? What format it's in? All these things are the basic questions that you have to understand. Now, knowing the corruption and fraud schemes is another area you have to understand, because now I know the data, I know what type of data there is, but I have to also know the fraud schemes. And that comes to where I was just talking about knowing more than just a procurement person. You have to understand the corruption schemes. Basically, there are 40 different traditional corruption and fraud schemes in contracting. That's the good news. The bad news is that there's 1,000 different ways to do each one of those. So what you have to do is you have to understand the data, and then you have to understand the schemes that can be used against the data. You know, a lot of people talk about things like bribes, gratuities, extortion, false invoicing, multiple invoicing, conflict of interest. And those are a lot of very traditional approaches to doing data analytics. It's what we commonly refer to as pay and chase, meaning that the contract's been awarded and now you're going after to identify where corruption may have occurred. But see, if you have a full understanding of the data and you collect data in the pre-award phase, not just the post-award phase, then you can do things like unbalanced bidding or anti-competitive schemes, which basically there's collusion going on between contractors. When you start getting to understand the data and you start understanding the schemes, things like unbalanced bidding can actually be a search that you can do for. And let me give you an example. To identify an unbalanced bidding scheme, and what that basically is that's where one contractor, one competitor has received inside information from a government person or a public individual that pretty much says that after the award, we're going to go ahead and make a modification and not put something out that was necessary in the request for proposal. Because this one corrupt insider knows it, they can actually lower their bid at the line item for that specific item that's not going to occur and raise their other prices excessively, but still be the lowest bidder. This is a bit more advanced of a scheme, but in order to do this, you have to collect cost proposal data consistently from each bidder down to the contract deliverables. And I can tell you, I've been in countries in Africa that actually collect this level of data, but they don't do analytics because they didn't realize that they knew how they could do it. I've also been in Southeast Asia, in one particular country, that they actually are collecting this data, they are doing it, and probably they'll tell me that as much as 8 to 10% of the time, they'll identify questionable anomalies in their data analytics because they're collecting at the line items. So my point with this is understand your data, understand its structure, understand its reliability, understand its credibility. Next, understand and get to learn the types of schemes that can be used against it. And again, they're very traditional types of schemes. And then explore how you can set those schemes up. So that analytical approach, okay, that we're talking about here, okay, is not just knowing the data, not just knowing the schemes, but also you have to know how to develop a scheme-specific analytical approach. Now, I can sit down with Ken and I can say, Ken, I want to search for this, and he can come up with a scientific algorithm formula to do it, but it's going to take our partnership in discussing this. So you got to know how the scheme, specifically what the red flags are. And then you turn over to a person like Ken and you say, okay, these are the type of red flags I'm looking for. If A plus B equals C, I want to know about that. In each of these schemes, these 40 plus schemes, even though it can be done 1,000 different ways, what you have to do is you have to design your analytical approach off your greatest risk, because it's impossible for you to try and identify every single potential anomaly that's out there. It's too massive with the amount of data we're talking about. So you design an effective analytical approach requires a strong understanding of the indicators or red flags of each of the corruption and fraud schemes. And in the same token, you have to do what I'll call a risk assessment, or at least a risk modeling. So this you can identify what's the highest probability of this type of scheme. Are we most vulnerable to post-award labor mischarges? Are we most vulnerable to counterfeit parts, to defective products, things like that? Are we most vulnerable to abuse by our procurement person in our sole sourcing? What are we most vulnerable to? Pick those top 3 or 4, look at the red flags, look at the schemes, and basically say, let's take an analytical approach to that solution. You know, it's interesting because, as Ken mentioned, we're both passionate about this subject, but my passion actually goes back many, many years. And whenever I do webinars or discussions on data analytics, I like to use this slide. What this slide is basically is a slide that I used to use in 2004. In 2004, I used to basically talk about all the different things that someday we may be able to do when it comes to data analytics. Someday that we'll be able to basically search for and find ways that people are corrupting our procurement processes. I won't kid you, in 2004, this was a pipe dream. In 2004, we were doing nothing more than search queries and sum counts and maybe a little bit of simple matching. But when you start talking about predictive modeling, you talk about classifications and clustering. In 2004, we couldn't do that. Artificial intelligence, we didn't even know what that stuff was. Why? Because one, we didn't have reliable and credible data. Two, so much of the procurement process was so much linked to paper. But that's not true anymore. It's now all basically to find the procurement activity that's not automated at some level would be surprising. It's going to be a small company. Major corporations and governments, there's some form of analytics. It's just you have to figure out how to get that automated data into some format for which then you can use it to do these type of advanced things. And because it's getting into that area, let me go and turn it over to Ken and let him talk a little bit about some of the different ways, those 4 ways that he had mentioned.
Thanks, Tom. And I'm going to tack on a point to what you were just passionately making to our audience. The techniques are great when you have a partnership between an industry expert, somebody in procurement like yourself, and a data science or an analytics expert like me or our company. But at the end of the day, if you cannot interpret the results, if you don't know the data, just like you were talking about, the data science is worth nothing. And I'm a big fan of data science. When I say that, I come out heavily and passionately to say, Tom was telling it straight when he says, you got to know the data. It's one thing to apply great techniques to good data. It's another thing, if you don't know the data, put together the right data with the right schemes, the right columns, because you're going to get back a bunch of mishmash. And if I did that for Tom in our partnership and I brought him back a bunch of data that didn't mean anything, no matter how good the techniques were, it wouldn't mean anything. So Tom, I hear you loud and clear, and I just wanted to make that point again to our audience. So we're going to look at the 4 types of analytics. We're going to look at rule-based analytics. We're going to look at distribution analytics. We're going to look at predictive analytics. And we're going to look at social networking analysis or networking analysis. We're going to look at a definition and some examples in each one. So let's start with rule-based analytics. Rule-based analytics are best used when an already existing pattern or a defined set of rules has been established. The rule-based analytics involve a series of business rules that use conditional statements to address logical questions. Rule-based analytics are commonly seen as sets of procedures that a procurement specialist or contracting officer follow, such as checking established databases for illegal or suspicious behavior prior to awarding a contract. Other rule-based analytic procedures that are used to prevent procurement fraud involve bid rigging and price fixing established rules. This allows a procurement specialist to raise red flags that require further investigation within the organization's acquisition program. These rule-based analytics can be provided from both the commercial sector as well as from established government policy and processes. So we'll transition to the next slide and we'll talk about a few examples. We're going to look at 2 types of examples. Purchasing fraud monitoring rules, where you have an idea that something's going on or you've got a strong idea that something's going on. And then rules that are deeper because you've got more than an idea, but you know something's going on and you're trying to reduce or prevent from the fraud from happening. So in the first category, examples of purchasing fraud monitoring rules, where we've got a good idea, but we're not as sure. We can check to see if invoices are significantly higher than negotiated contract prices. previous contracts or industry standards. We can run a check to see if the same supplier is being used multiple times without considering other bids. We can flag spending that does not meet the three-way matching between purchase order, delivery slip, and invoice to ensure that the company only pays verified invoices and that no duplicates are paid. Or another example, we can compare key employee records with preferred suppliers, looking for connections such as phone numbers, addresses, or bank accounts between those suppliers. Now, when we have a better idea of something going on, we can also use rule-based analytics to help reduce or prevent fraud. And some examples of that, we can look at procurement protocols that should require checks and balances with more than one manager required to sign off on big purchases. The manager who orders product should not be the only person required to approve that, as you all know. Invoice payment check can be used to make sure that the three-way matching system to verify invoices before payment. And we can use checklist rules and processes. For example, bid terms and acceptance requirements should be clearly defined and enforced. And we should ensure vendor due diligence is carried out during any vendor approval process. Suppliers should be thoroughly vetted and verified by at least 2 people and kept in a supplier database with preferred suppliers identified. Now we'll transition to distribution analytics. So,
before you do, can I ask you a question?
Sure, Tom, go ahead.
When we did that, when I did my war story, what we basically did was we simply said, you've got 22 people in your company who make the same decisions about 5 to 10 different contractors. You tell us what their selections were. And like I had mentioned earlier, out of a potential 124, our primary target made 116 of the one. That was basic rule-based analytics, I guess, right?
That's exactly right, Tom. That was a perfect example of rule-based analytics. And it was more of the first kind, where we had a hunch something was up. So we put in a few rules and did some analysis based on some rules to find out that indeed we were right. And 116 out of 124, as you said, it's way beyond statistically normal.
And it's interesting because we did that without a guy like you. And it just tells me that, if you really think about this, you can actually start out with rule-based analytics with a known suspect concern, and you can do this. We weren't sure if that data was pure, but it worked, and then identified 6 others. So it's interesting as I hear you talk how this can be done if you just think more about what really your risk is and what your data has. So,
Tom, you said a key thing right there. Rule-based analytics are great for when you have a hunch or you already know something's going on and you're trying to measure it. You're trying to track down the culprits. As we'll see with each of the 4 analytic techniques, they have strengths and weaknesses. And we'll say it at least 2 more times. They're best used together. If you use any one of the techniques by themselves, they have strengths, but they have weaknesses. But when you put them together, they're much more powerful than just using the techniques individually. The use of distribution analytics can help us discover outliers within a pattern of data. These outliers are more commonly referred to as anomalies, and their detection within data can be an alert for further investigation. You'll hear some people in the industry call it anomaly detection. Anomalies can be detected when looking at normal defined behavior and noticing events that occur that are not typical of the normal behavior. These anomalies can include procurements occurring outside the normal area of business, or purchases occurring that are above a normal dollar threshold. Distribution analytics can include the operation of background servers that authenticate users based on what type of transactions they're executing and what servers they're allowed to log into. So as we transition to the next slide, we're going to look at a few examples of this. One of the examples uses a law called Benfords Law. Now, Benfords Law is best shown visually, but we'll talk about it briefly. Benfords Law is a pattern of the numbers that are used when you have dollars or other currency. So the number 1 occurs much more frequently than the number 2, and there's a downward descending pattern to the number 9. So to apply Benfords Law, it's one thing to read about Benfords Law and to see what Benfords Law means. But in applying Benfords Law, a procurement group can perform statistical testing based on the use of the law by comparing the expected distribution with the actual distribution of most significant digits of the invoice numbers or amounts for a vendor that are observed in the data. And this is where good old-fashioned, I say good old-fashioned because statistical testing has been around much longer than some of the artificial intelligence that we'll talk about today. But good old-fashioned hypothesis testing and triggering are used from that point. We can also look at vendor requester monopoly. We can have a rule that checks to see if a high percentage of invoices from a particular vendor are approved by a single employee in the company. In this case, as you know, when a single employee is approving, there's a higher chance of collusion because that single employee has a large amount of control on accepting or rejecting the vendor invoices. The fraud detection rule in this case should trigger if a single vendor's invoices are approved by a single employee over some large percentage, such as greater than 90%. We can look at some simple date and time comparisons. For example, purchase order creation date occurring after the invoice date. So a standard procurement procedure is to first create a PO, followed by submitting invoices for products sold or services rendered against that PO. Sometimes the procedure is not followed to the law, resulting in non-compliant behavior. Now, as you know, non-compliance isn't always fraudulent. But what we would want to do if we had a hunch is we'd want to check the invoice dates. Maybe they're indicated in a structured field. However, sometimes different from the actual invoice date, which can be extracted from a comments field entered by an approver other than the requester. We can check if both of these invoice dates, which should ideally be the same, are at least after the PO create date. Otherwise, we trigger an event. Now we'll transition to the third type of technique that we're going to talk about today, and that's predictive analytics. Now, a lot of times, this is the one that gets the most amount of conversation. I'll say it for the second time. All of the techniques are good for one or more things, and they have some drawbacks, but used together, they're much more powerful than individually. Predictive analytics looks at past data and past behaviors to predict what variables have the most impact on fraud prevention, or whatever topic you're looking at, but we're talking about fraud prevention. Focusing on existing variables in instances of fraud occurrence provides the ability to be able to predict future threats and risks of fraud. Predictive analytics uses sophisticated techniques to investigate scenarios and helps to detect hidden patterns that otherwise can't be seen that exist within large quantities of data. Predictive analytics also looks at fraud schemes such as change order abuse, product substitutions, and defective pricing situations that have occurred with vendors in the past, and predicts the possibility of events occurring in the future. So let's look at a few examples of that.
Can I ask you a question before you do that? So is this like continuous monitoring? So this is different than the rule-based one that I was talking about, where we had an idea and then we went and searched for it. Can't you run this like continuous monitoring, like in the background? And then if these anomalies show up, they can give you an advance warning before the fraud actually occurs?
That's a good question, Tom. What's important about predictive analytics, and thinking about it as continuous monitoring is true, but what you have to do, and it really goes back to what Tom and I have been hitting home about, is you have to have historical data on which to detect and uncover patterns that you then move forward into the future to see if those patterns continue to exist. And so the continuous monitoring that Tom's talking about can only happen with predictive analytics after you've picked up some patterns that were hard to detect amongst a slew of data, and then continuously monitor into the future for those same patterns to exist to present highly probable areas where fraud was occurring. One example of predictive analytics used in preventing fraud would include looking at two companies that seem to be getting contracts with the government on a rotating basis and determining if further investigation into potential collusion was occurring. Another example, and you'll see some of the techniques for predictive analytics listed in the bullets here. Another example is creating a logistic regression model on historical fraudulent data and non-fraudulent transactions to create a model to predict potential fraud on future procurement transactions. So on the question that Tom was just asking about, if we were looking at a logistic regression model, and a lot of times we'll talk about models in predictive analytics, we're going to model historical data where we know that fraud was present. That's an important point. If we didn't know that there was fraud present, then we'd have no way of knowing if there was a pattern to the fraud. And we'd have no way to model and look at what variables that fraud helped trigger on to continuously monitor and roll into the future like Tom was asking. Once we do that, whether it's logistic regression or a decision tree, we then can roll forward, continuously monitor in the future with some of those key predictor variables or those key fields, giving us indications of high probability when a fraudulent situation can occur. So once again, it always comes back to data. It always comes back to knowing the data. Moving on to the last technique that we'll talk about today, we're going to look at social networking analysis, or networking analysis, some people like to call it. Some people also use the acronym SNA for social networking analysis. It's an analytical approach of correlating people, entities, and relationships to determine how tightly an individual or business is related to others who have known compliance issues. These relationships can be from shared phone numbers, physical addresses, IP addresses on your computer, bank accounts, credit cards, or any other connection that's detectable in your data. Again, without the data to be able to learn, whether it be predictive analytics or social networking analysis, we're not going to be able to do or perform some of these techniques. The results of SNA can show the risk that a specific individual or business presents based on the relationship with others who have known issues within the network. SNA is very good for enhancing other forms of analysis. The ability to analyze unstructured data through linkage in social network and analytics and establish that linkage among different entities is newer in the field of analytics. And it gives us exciting capabilities in the world of fraud detection. It can enable contracting officers and other procurement officials to react more quickly when a connection is discovered and attempt to prevent or limit the impact of government fraud. So let's look at a few examples. Examples of social structures commonly visualized through social network analysis include social media networks, memes and how they spread amongst viewers, information circulation, friendship and acquaintance networks, business networks, knowledge networks, difficult working relationships, social networks, collaboration graphs, kinship, and disease transmission. These visualizations provide a means of qualitatively assessing networks by varying the visual representation of their nodes, the people or the entities, and the edges to reflect attributes of interest, edges being the lines connecting the people of interest. Now, Tom and I have talked about this many times. I just want to make a final point before giving it back to Tom. You heard various strengths and weaknesses about the different techniques. And each of the techniques do have strengths that make them better than some of the other ones. But if we were to use a single technique and say that that was the best one to be used, we'd still be lacking in other areas. If you're going to ask me, predictive analytics, if you've got the data available, and I mean a big volume of data into the history and known fraud, not guessed fraud, but known fraud, predictive analytics is probably going to be your best technique to continuously monitor and roll forward. But while that might be the single best technique to develop recognition of a common pattern visible in your historical data, the techniques work best when used in concert with each other. Because as we know, when we have a known problem, rule-based works just fine. And it's cheaper in a lot of cases than implementing predictive analytics on a go-forward or continuous monitoring basis.
Ken, let me ask you a question. I've heard you say things like probability statements. So is predictive analytics, the results of that give you like a probability statement? It's an 85% probability. Is that when we talk about predictive analytics, is that when we start hearing about probability statements when it comes to data analytics?
That's right. Under the covers of what's going on with predictive analytics are statements and snapshots of probabilities given the state of a few of the variables that made for a high probability fraud situation in history as you move forward. So the recognition of the patterns in history continuously monitored moving forward bring up snapshots of probability on that current state moving forward, and that lets you determine that there's a high propensity or a low propensity for that fraud to be existing at that moment in time. All based on probability, like you're saying.
Thanks, Ken. When we started this, I mentioned to you that I have the opportunities to travel around the world and get involved with analytics and looking at e-procurement systems. It's not important what country this is, but this snapshot right here is a particular e-procurement system in one particular country I was in. That, and I won't try and pronounce it, but the UMUCYO is translated into the word transparency. And each one of those bubbles around it are different data sets in that particular country that this particular e-procurement system has connection with. Those arrows indicate the flow of relationship between the e-procurement system in the center and each of the bubbles. And the reason why I show this to you is to give you an example. If you look in the upper right-hand corner, you see IFMIS. That's basically their financial management system. And if you look to the lower left, you see NIDA. That's the National Identification System. So while I was there, I was asking them, you're pulling data for the purpose of populating your e-procurement system to make it easier on your users, pulling data from your IFMS, pulling from your national identification system, your banking system, pulling this. And what they're doing is they're using it to just pull it and fill in data sets to make it easier so their employees don't have to put it in manually. And I was like, wow, that's really impressive. And that's really good from an efficiency perspective, but are you doing any data analytics? And they were like, well, give us an example. I says, well, if you've got your national identification, so basically everybody in this country is registered through your national ID system. Have you done any and in that data, you got who their employer is, and you've got their addresses, and you got their banking information. Do you do any cross-reference to see if any of those employees that match your system in your employee system actually is also in your contractor system? Because if they are, it lends itself to why is one of my employees' email or banking information or home address also in my vendor system? You may have a vendor corruption scheme going on. So my point of doing this is I say use all the data. And obviously you can't use all the data, and Ken would roll over if I told him he had to use every piece of data. But basically what I'm trying to tell you is look at the data you have. Know your data. And by knowing your data, you say, wow, we can connectivity between our systems. How can we use this data to allow us to do some of these searches? That's what I'm talking about in this particular country. And they were very surprised. And it wasn't that complicated once we started sitting down saying, these are the type of schemes you can do. Bring in your data scientists, bring in guys like Ken, bring in a company like his and say, listen, this is what you can actually do. This is how you do it. And let the data scientists help you figure out the way to actually do the searches to identify what your higher risks are. This particular example I like. This actually was in Vietnam. Vietnam, what they basically have is they're using in their e-procurement toolkit, they have this abilities that they can actually look at the percentage of distribution of its contracts across its country in the different regions. What this allows them to do, by this simple visual display, they can see the amount of contracting in that particular area. They can then click on any one of those brown spots, and that allows them to deep dive into the type of contract structures. Is it sole source? Is it competitive? Is it restricted? That then gives them a probabilities of how much activity is happening in that particular region, and they can cross-reference into the other regions to identify potential anomalies. Now, like Ken said, does that mean that there's fraud or corruption? No. That simply may be that you have a procurement specialist who is not fulfilling their requirements. They're not actually competing when they should be. They're depending too much on prior contractors. And it's an efficiency or a waste issue because you may not be getting the most, the cost savings on behalf of your dollars. So the simple tool that's being done in Vietnam by using their electronic data helps them isolate where they may have a concern as it relates to not just corruption, but ineffective or inefficiencies. This is an example of what happened in Mexico. Mexico, actually, they made all of their data available, and a non-government entity took all the procurement data and they matched it up to the election of their president. And what they come to appreciate, that they found a clear, compelling examples of particular companies that were getting high probability of getting contracts during certain presidential election terms. And then when the next election occurred and that particular sitting president did not win, they noticed those companies lost it. That's an example of how they were doing trend for favoritism under the elected officials. Here's another example. This particular example, which is interesting, this particular example actually is being done, was created, this particular dashboard, by Development Gateway. And they do this through an open contractors partnership. It's an organization, it's an NGO. And with this particular dashboard, that particular country sit there and says, we are going to define 13 different types of fraud schemes or processing rigging schemes or collusion schemes. So they basically said, these are the 13 most likely schemes that may be occurring in our particular contracting based upon risks. They then took, again, a person like Ken, and they says, build us whatever algorithms or whatever data analytics approaches you need to, and here are all of our contracts. We want you to run it against all of our contracts. And then they have a way of displaying it, as you can see, as it relates to the total number of schemes was identified, what type of area within the country was done, things like that. And what that allows them to do is then deep dive into a particular contract. And here you can see they went into this particular contract and they start looking at what type of schemes that are we at risk here. Fictitious suppliers, false bidding, fictitious suppliers, all these different ways that they broke it down and displayed it. And they can just keep drilling down to find out, do I have corruption and fraud, or do I have some anomaly? Is it an improper payment that we should have been making, not through fraud, but through error, through mistake? So when you have the data and you understand the data and you understand the schemes and you do a risk assessment or a risk modeling to identify what your higher probabilities of risk are, and then you bring in the guys like Ken and his company or people like that, and you sit there and say, okay, here's our risk, here's the schemes, here's our data. This is what we believe you can do with the data. Do your algorithms, do your magic, as I call it, and basically help identify where we have risks. Then we can start looking at that risk with more logic, more systematic approach, and we can identify where we potentially have problems. And again, if you've heard one thing, we're not just talking about corruption. We're talking about improper payments. We're talking about mistakes. We're talking about errors. something as simple as, why are we having a larger number of sole sourcing during the end of the budget cycle? Well, is it because of poor planning on the budget people or the procurement people? Is it people trying to just spend money quickly because they're coming to the end of the cycle? It has nothing to do with false claims or corruption. It has to do with people not following the rules. You know, these are all examples of what you can do when you start understanding the data, okay? Now, you know, let me close with this in my particular case. Honest, fair, impartial, and legal contracting free from misconduct like corruption, fraud, or failure to comply with policies is achieving true procurement integrity. And that's really what you want. Pure procurement integrity is really the ultimate goal. Detecting it, preventing it, all these nice little buzzwords after, but at the end of the day, you want honest, fair, impartial legal contracting free from any type of misconduct, be it deliberate, be it abuse, be it fraud, be it corruption. That's ultimately procurement integrity, okay? Ken, you got anything you want to close out with?
Yeah, I'd like to add to what Tom was just saying in closing. It's no longer of a question of how data analytics can enhance procurement integrity and identification of improper payments. Rather, it's really a question of how to maximize the various techniques and data available to you. Data analytics is not the be-all, end-all by any means. Yes, I look at it through a lens of a data scientist and somebody who's worked with data and analytics for almost a quarter century. But the techniques and the software and the data available to you is such that when combined with that quality data at the right points in the procurement process and well-qualified procurement professionals like Tom, in a setting committed to procurement integrity, the potential is limitless.
You know, at this time, we want to close out our webinar. And once again, on behalf of myself, I would like to thank ILI and Kim and giving us this opportunity to present. As you heard us, Ken and I are a great team. We're very passionate and we really believe in this. But at the end of the day, you own the data, you own the information, and you have to be creative in how you can use it to maximize and reduce your vulnerabilities. So I want to thank you on behalf of myself and give Ken an opportunity to close out himself and show his appreciation. Please, Ken.
Yeah, I mirror Tom's sentiments. It's great working with somebody as passionate as Tom, and we have a great dialogue, and we've put together some content that hopefully you got some value out of, and we're doing this in other areas as well. But when you run into situations where you don't know how to go about it, working with somebody like Tom and the partnership between PICS and Zenkos, we're here for that, and we'd love to help you out if that's the case. But we really appreciate your time today to tune in and listen to the content that we provided to you.